Hi, everybody. This is Hyperwave. It is me and Tyler on. We will go as long as the rain hits me, which may be pretty soon. Definitely a lot of topics to cover. Obviously, every price. So we are most definitely going to be talking and looking at a lot of indicators, topic ADX, everything about what Tyler's still thinking on, even though we crossed the 6K price line. Are we still going to win our bet, or are we starting to freak out? On top of that, it's gonna end up being a bit of a political discussion. And I actually will not do any spoilers. So before I say anything else, I will just throw it over to you, Ty. And everybody, I will look for your live chat. So send through any fun questions. I am off to New York tomorrow, moderating on Saturday. So this may be our last vlog until next week. So hit us hard. Okay, tight.
Great. Thanks, Leah. Hello, everybody. Lots of fun things going on. We picked out three of them. The big news in crypto land is Bitcoin getting up to 6,000, up to 6,100 on a couple of occasions, backing off a little bit. The big resistance that we've been talking about is 5,800 to 63, 6,250 or 63. We've gotten halfway up through that and then backed off a little bit. The question is, are we going to be able to break through to the top or not? And my feeling is we are not going to be able to break through the top. But as you all well know, I also didn't think we were going to break through the 42 to 4,400, and we did. Nothing has changed from the long-term perspective in my mind, and we're going to look at some charts that I look at to go over why I say that. We've had a lot of people in Twitter ask what is the basis, other than just a target of 1,000 on a hyperwave, for us remaining bearish, and that's what we'll try to go over very quickly. But to me, the big stories aren't in the crypto space. The big stories are in the world economy, U.S. stock market, U.S. economy, and therefore stock markets around the world. And everybody is watching the next 9 hours to see what's going to happen between China and the United States. And depending on how closely you're following all this, it is great drama at all levels. And two big superpowers not lobbing nukes at each other, but lobbing what is the equivalent of nukes at each other, because the fallout from a trade war will affect the entire world, the world economy, all sectors, all individuals, all businesses. And so it's very easy to get very emotional about it and wonder, should I buy, should I sell, should I do this? I know, because I've been on the phone for the last 3 days with many clients and consulting clients trying to answer those questions. So I know if they all have those questions and are following it that closely, a lot of our listeners are too. So we're going to talk about those three things: Bitcoin at current levels, the China trade agreement, what's the possibility, probability of that happening in the next 9 hours, and then finally the effect on the U.S. stock markets. I will just make the statement that up till a couple of minutes ago, the last week or 2 or 3 weeks pullback that we've had in the Dow, the S&P, and the NASDAQ have not really affected the long-term uptrend. And we'll see some charts that show why that is. That's right through today. Now, tomorrow morning, it might be different. And we'll see what I'm looking at to make that call. So what we'll do right now is we will just go very quickly to screen share, and I will pull up some charts, and we will start with this one. I'm going to do that. Can you see that one, Leah?
Yeah, Ty. I don't know if you saw my thumbs up. You're
Oh,
good.
sorry, I didn't. see that. So I'll go boom, I will go boom, and then go like that. Okay, and okay, the first thing we're looking at, it's funny, it's kind of foreshortened for some reason. I don't know why it is. Maybe because I've got this group chat. I'm going to take that off. There we go. Okay, so no, that's not right. Seems like everybody is changing their.
So while Tyler's figuring it out, I will watch your group live chat. Ooh, looks like he may have gotten it. Otherwise, I was going to ramble about Uber IPO, SoftBank Vision Fund, and a lot of other nonsense. You ready, Ty?
See that one?
Yeah.
Okay, great. What we're looking at are the spies. I'm going to look at the spiders, the diamonds, and the Qs. And we're looking at a weekly basis. And I'm going to go to the monthlies in order to show where we actually are on a long-term basis after the pullback that we've seen. So we've got a lot of things on these charts that are things that I look at when I start an analysis. And the big things we're looking at here are the fact that we have recently hit new all-time highs on this candle, and we have hit the same highs on this candle, even though this has turned into a red candle because we're down for the last several days, several weeks, but we're still on a green 4, green 3 above a green 2 using the sequential system on a monthly basis. When we come down to the weekly, we were on a green 7 after hitting new highs last week, started a couple of days ago in the same vicinity, and then today we dropped way down. And so how we close today will be fairly important. However, notice that the upper Bollinger Band here has not been taken out on a weekly basis, and we're trading in this range between the center Bollinger Band and the top. You don't really get a sell signal until you are above that upper band on a full candle. And we will look at some things where that has occurred, but not right now. So we're in the middle of the range. Notice that I'm going to turn some things off now. First, I'm going to turn off the Bollinger Bands so you can see the moving averages, which I am using the 2, the 7, and the 30. And notice that this is the 30, which has begun moving up. And both the short and the intermediate term crossed a long time ago before this last run up. We had a 9 sell on sequential about 2 months ago that didn't go anywhere. And then we went to new highs. So there is nothing in this chart except notice this little dot right here. This is the stop and reverse points that have moved right up along. They were taken out this week. In fact, this morning is when that occurred. On a weekly, we've got this short-term 1-week sell signal. But that's the first time that's occurred all the way from the bottom back in December. So that's something to sit up and take notice on when we look at the diamonds and the Qs. So I'm going to pull the Qs up now. Here, the strongest of our indexes has been the NASDAQ. As you can see, this high last week. You can't see it, but the stop and reverse point is just pennies away from the lows this morning before we had a big rally in the market having to do with Trump coming out and saying that he's going to talk on the phone to President Xi before everybody gets down to the actual negotiations. And they've got until 12:01 a.m. this morning before Trump is threatening to put additional tariffs on. In any case, I'm not saying that anybody was sitting there watching stop and reverse points, but their timing was perfect because we were able to rally in the Qs very strongly above that low point. Now, these keep moving up, which means next week it's going to be way up here, but we will know by tomorrow night, probably tonight, what is going to happen. I'll give you my fundamental opinions on that in just a second. Lastly, I wanted to look at the diamonds. The diamonds also broke through the stop and reverse points, which had been unbroken since December. But again, take a look at the moving averages. We are now below the short and the intermediate term, but the intermediate term is still moving up. And the long term, from all of the nonsense that happened in 2017 and 18, is slowly still moving up. And the only way that's going to turn down is if prices get below that. And they could get below that depending on what happens here in the next day or so. So we are fully invested in the stock market. We, meaning my discretionary clients and what I'm telling my consulting clients. But I think this is such a critical period right here that we will begin taking something off the table depending on what happens tonight and tomorrow. If it looks like the tariffs are being put back on and we're going to have a sell-off in the market, mainly because we did take out those stop and reverses, mainly because the short has cut through the intermediate term and the price is below both of them. But this is not all out get out of the market, nothing even close to that. But this might be a point where I will make a decision tomorrow that it is time to take something off the table and put it either into bonds or into cash or into some inverse funds to protect part of the portfolio. How much will depend very much on the action in the next number of hours. Now, that sounds like a fairly extreme statement because I don't usually make any kind of calls based on news items. And I'm not making a call based on this news item other than to notice that certain technical things are happening on certain indexes and with certain major stocks. We're not going to look at individual stocks or sectors today, but I did want to pull up one other thing, which has to do with how other countries have been affected by all of this talk. And we're going to start with the UK 100 index. And you can see that it has also broken through everything. It did not take out its stop and reverse here, but we are below the intermediate in the short term. The long term is still moving up, not too bad. Japan is all the way down to a descending long-term moving average. It's cut through the short and the intermediate term. It's in a much more dangerous position than the US markets. When we look at other European markets, Germany still has been bouncing right along with the United States, and it's in the same basic configuration that the US markets are. When we take a look at the Asian markets, the picture is much worse. This is large cap China, which is now broken below the long-term moving average. It has been going down for almost 5 weeks. after a fairly good rally, in some cases better than the US. And we do have a price flip, and we've got a red 2 below a red 1. It's in a very dangerous position in terms of heading back to the lows. This is China's small cap stocks, even worse, except the long-term moving average is still moving up. We have taken out the stop and reverse points. It has been going down for 5 weeks, whereas most of our markets hit new highs just a week ago. This is the German stock market. This is the MSCI. And it has been relatively strong, but muted on the upside relative to where we are, but it is not in any danger as opposed to what we just looked at. And here is Hong Kong. You might have been reading how big of a drop this was on a percentage basis earlier today. It did come back off of its lows, along with a number of the other markets, after it looked like maybe there would be some resolution to the problem. Okay, I'm just going to quickly pull up Bitcoin because there's an awful lot going on there. And this is the chart that I've been showing on some of the broadcasts that we've done, that I've been using for a long time, that includes 3 parallel channels of resistance and support. We don't need to talk about the upper one because we're in no danger at this point of getting underneath that, which is 10,000 and the 11,000 area. The one that we are concerned with right now is this one. This is this range between the 5,800 level and the 6,250, 6,300 level that we have now finally gotten back up into, above the short-term moving average, above the intermediate term average, but the long term, and again, I am using on a weekly chart for the long term just a 30-week moving average, which is approximately the same as a 210-day moving average. But I'm not using the real long things that some people are, 50-week, 200-week, and that sort of thing. To me, this is the more important. It is flattening out, and it will not take much longer for this to move to the upside as long as this price stays in this area. My thinking is, as you know, that we are not going to be able to make it up through this area of 62, 6250, 63, that we will stall out somewhere in this range and go back and test, first of all, the intermediate term moving average at 5,100, and then I believe come down and test the 4,400 long-term moving average, which will then at that point flatten that moving average out unless we can break below it. There's a lot of support, I believe, at 4,200 and 4,000 and nothing below that. So as we sit here right now, Leah and I have a bet on that we're not going to hit 6,500 before we drop down to 1,500. And I'm still, believe it or not, comfortable with that bet. And that bet was made on the basis that 6,500 is above this level, above this, what I call a zone. It's not a line, it's a zone that runs between these two. And that zone comes, as everybody knows, from all of this, where we hit over and over again on many occasions the upper or lower band of that zone before moving back up and back down, testing it again, and then back up. Each of the zones were lower than the one before them until we finally gave way below what I call the phase 2, which is this red line. Once that was broken, there's nothing for me in Hyperwave except the ultimate bottom, which is still 1,000. That can't change regardless of what the market does. We're either going to hit it or we are not. when I don't have any other tools to use, no other phase lines or hyperwave lines, I have to rely on what I think is the most accurate of my technical tools, which is Consensio. And Consensio right now, as long as this long-term moving average is not moving up, is in a bullish posture, but not bullish enough, in my opinion, to overcome this resistance. That's a thesis on my part that will either be proven or disproven. If it is disproven and we can break above the upper side at, let's call it 6,300, and close there and get a full candle above that, I will be issuing bullish purchases, starting out with small positions and then increasing those positions if the price continues to go higher. In other words, I will override my hyperwave final bottom until evidence comes in that shows that we are in for a larger move up above the 6,000 area. I cannot even guess what that might be, and I won't try to, other than if we extend the only other real important resistance to me, which is this $10,000 to $11,000 zone. It is possible. Then Zen has actually been looking for that as a possibility for the price to get up there and then fail and go down to much lower levels. I could see it going up somewhere into the 7,000 to 8,000 before falling back down, taking all of these supports out and going to lower levels. However, if we can get above all of this 6,000 bottom, the way we did the 4,000 to 4,200 here, then what you do is you travel to the next zone. And at that point, I would be ready to actually take positions on for myself, my family, discretionary clients, and consulting clients. That has not occurred. I do not believe it is going to occur, but I want to give everybody a heads up on what my thinking is to answer the question, are you simply going to stay out of the market no matter what based on your hyperwave? And the answer is always no. We always bring all kinds of other tools into our analysis. Now, here are some reasons why I don't believe we're going to be able to get above this band between 6,000 and 6,300 before we take a sharp drop back down. First thing I want to look at is the ADX. This is on a monthly basis. And what this basically signals is this was the ultimate top in the market. This is December of 2017 when Bitcoin peaked at 20,000. Just so everybody can see, this is what we're talking about. On this big spike up, this particular tool called the ADX happened to reverse at exactly the right point. And we've talked about that in some of our seminars, and some of my consulting clients have been following it. But I want you to see that this is in no position to call the end of the bear market. It's not flattening out as it did back here in the 2015, 2016 before heading higher. It is in a free fall right up through this week. The second thing I want to point out to people is what I call the best long-term indicator for long-term trends. It is fairly not useful for intermediate or short-term or traders or swing traders, but for investors, it's a remarkable tool. It is flattening out, but it can flatten out for very long periods of time before it turns up. And even after it turns up, as it did in 2015 and 2016, that can simply mark the bottom of a long move that can go for many months or even years before it turns up. You need price to do a lot more than it's done right now. We have not yet turned up on the Copic curve. The third thing I'd like people to understand is the moving averages. Now, it would be easier if I take a look at GBTC to show what I'm talking about. And GBTC does not move with Bitcoin. It moves above or below it with a premium or a discount. It's the instrument that I prefer to Bitcoin simply because it's traded on an exchange and it's regulated, and I understand premiums and discounts on closed-end funds and have traded them for years. But I want to look at the technical side of this. And on the technical side, just as we looked at with the ADX, no sign of slowing down to the downside on the monthly basis. On the Copic curve, it is slowing its descent. It's going flat, but it's still not turning up. If and when my long-term indicators, long-term moving averages, long-term Copic curve, long-term ADX signal a bottom in Bitcoin, we will be going into that regardless of Hyperwave. What does that mean for Hyperwave? Not a thing. Hyperwave was a wonderful tool that allowed my self and others to get out at the top of the Bitcoin market and stay out right through today. And people are saying, yeah, but that means Hyperwave didn't do what it's always done before. That's a wonderful observation that we will be able to use in the future. But in terms of timing on the upside of Bitcoin and staying out of Bitcoin until it could form a bottom, which it still has not done, taking a look at this blue long-term moving average, which is still moving down and has not turned up. That one is my 30-week moving average. It simply means that this will be the first time out of 400 and some that we've looked at that we did not get a funky hyperwave off of the phase 3 or the phase 2, and it did not go all the way back down to the phase 1. And we'll put it in the history books as Bitcoin and the Bitcoin market apparently is so unique that it had whatever qualities were necessary to keep it from going all the way back to the phase 1 line, and that will be that for me. Now people say, yeah, but a lot of people have been listening to you and they've been shorting and have been exposed to this market to the downside. And that is why I've been so careful over and over again, all the way since December of 2017, saying I would never short Bitcoin regardless of what my technical tools said, strictly on a fundamental basis. Those of you that have read my Medium article that Leah and I put together calling for as high as $10 million Bitcoin have to understand how bullish we are on the prospects, not for the crypto market, not for the other altcoins or ICOs, but just for this one particular experiment, Bitcoin, that it would be suicidal to ever short it. Now, I agree with people that say it would be nice if this turns into the bottom of the market, to have caught the bottom of the market and been able to make $3,000 on Bitcoin as it has come up to this region. I agree with that. But I think it's far more important to have been out of the market as it dropped $15,000 to where it now sits, as opposed to worrying about catching the bottom 10% or 15% before it actually turned up. We will always be in a trend where we can pull 80 to 85% out of that trend when that trend is actually in force. This one still is not. And with that, what I'm going to do is I am going to stop screen share and move back with my wonderful partner and see what she has to say about either the China trade, where Bitcoin is, or where the stock market is right now.
Ty, say that again. I kind of lost you.
Yeah, any comments on either Bitcoin, China, or the stock market?
What do you think? Bitcoin and why we're still, just as I guess summation, still so adamant that it is not going to break through to 6,500. I'd say, how can you just do a 10,000 feet view elevator pitch of why, and does this not invalidate Hyperwave? I'd say just a quick summation for people kind of jumping into our channel then.
Yeah, that's a great point. We've only had 150 or 200 people actually take the entire course, which is 8 hours long. We are coming out with a book. And the importance of all of that is that we go over many, many different hyperwaves over the past 100 years, including many that are active today and are being very helpful for those people that took the course. Helpful from the point of view of so many hyperwaves are active right now in the stock market, either in phase 2s, 3s, 4s, 5s, 6s. And the use of those phase lines, when you look at 400 of these examples over many, many years, where all the same things happen in the same order, in the same way, have given me a lot of confidence that whenever you apply it to any asset class, including crypto and Bitcoin, it is a wonderful way of seeing what the main direction is, and most importantly, when that direction ends. And the two things that pop out over all of those examples is that the phase 4, when it ends, goes into a 5, 6, and a 7, in which the 5 is a big drop, the 6 moves back up but never gets above the 4, and then the 7 goes all the way back down to the beginning. All 7 of those have occurred with the Bitcoin hyperwave, except for one thing. We have not yet returned to the beginning at that $1,000 level. But it's been very useful in making a lot of money in the upside of the market and staying clean out all the way down to where we are now at 6,000. Now, one of the most important things that people learn is if and when that phase 3 and phase 2 line are broken to the downside, that what results is a tremendous drop. And that's exactly what we saw precisely at the same point we are now sitting. That drop from 6,000 to 3,100 occurred not only for other technical reasons, such as the declining triangle that was enormous, but a lot of other technical tools that other people were able to use to say that the 6,000 bottom was a very important bottom. It happened coincidentally to be the precise point at which the phase 2 line came in, so that when that broke, we were able to say that the 6,000 was no longer a potential bottom, that that bottom had been erased, and we were quickly at 3,000. Almost no one followed us. Almost no one followed Tone Vays and his system, nor the hyperwave system, to protect themselves, except those people that had been listening to us all the way from the 20,000 top. I'm saying that because that's what the importance of hyperwave is, not only here, but in the stock markets, in the bond markets, in the currency markets, in individual stocks. And it's that probability, by seeing so many examples of it, that brought me to begin applying it to Bitcoin. And luckily in time to catch the upswing of 2, 3, and 4 and get out before 5, 6, and 7 began. So that's the reasoning behind it. But anytime that I get evidence that something is not working compared to other indicators I use, like Copic, long-term moving averages, Consensio, and the ADX, I'm not going to be dogmatic about hyperwave has always got to be right. And that's why I've made those comments that I did earlier about what will happen if we see a breaking of the upside on a closing weekly candle above that 6,300 to 6,350 range. All right. So thank you for asking about that, Leah. Anything else that you wanted to discuss? I know you're following everything going on with this China trade, and you're particularly upset with these tariffs and the way Trump is using them. And now it looks like what you're saying is coming right down to the clock, and we're down to just about 8.5 hours before we're going to know what's going to happen.
Definitely true. And in the meantime, I'll keep it on you, Maestro, though. Would you, and then let's wrap us up for the day.
Great.
People asking about longs versus shorts, potential short squeeze.
Yeah, I don't put much credence most of the time, particularly in the crypto market and or with Bitcoin, to the numbers that we're seeing that show net longs and shorts. As everybody that's listened to us knows, I don't feel confident with what I get from exchange information, from volume information, from cap information, from mining information. And until I have more confidence in where the numbers are coming from, all coming from unregulated entities, I'm always afraid that what's about to happen is what we saw happen with three excellent analysts, Murad, Willie Wu, and David Paul, in terms of spending huge amounts of time building a model that turned out to have to be changed because the information they had been getting from the infrastructure was unreliable. And
all right, Ty, we're starting to get drizzle.
oh, okay, very good. Well,
I'll
thank
let you
you
wrap
all
it
very
up.
much. We will be back on tomorrow to see exactly what has happened.
Okay, awesome. All right, bye, everybody.